Perfect. So very good morning. Thank you for your patience. Good afternoon and good evening to everyone. We will now start one more time with our webinar on consumer empowerment and market conduct, and we welcome everyone to our second CEMCWG working group technical webinar. Bonjour et bonsoir à tous. Nous allons maintenant commencer notre webinaire sur l'autonomisation des consommateurs et la conduite sur le marché. Et nous vous souhaitons la bienvenue à notre deuxième webinaire technique du groupe de travail CEMCWG. Buenos días, tardes y noches a todos. Ahora comenzaremos con nuestro seminario web sobre empoderamiento del consumidor y conducta del mercado. Damos la bienvenida a todos a nuestro segundo seminario web técnico del grupo de trabajo CEMCWG. Dear participants, the COVID-19 crisis has had sudden and wide-ranging effects on consumer behavior. A greater number of consumers are experiencing higher levels of distress caused by direct experience of fear of the health, economic, and social impact of the crisis, and they are vulnerable to commercial exploitation. Today's discussion will focus on policy and regulatory interventions, opportunities for cooperation and partnership, and the role of consumer protection amidst a pandemic. On this note, we warmly welcome you to the CEMCWG Working Group Technical Webinar on Consumer Protection amidst a pandemic, the case of COVID-19. My name is Sulita Lovo from the Alliance for Financial Inclusion, and allow me to introduce today's moderator, Mr. Eliki Boletawa, CEMCWG Policy Manager at AFI. Mr. Eliki Boletawa will bring you through this webinar.
Warm welcome to all participants that are logged on this evening or morning or whatever time you are from, whichever part of the world that you are logging in from. We are very fortunate today to have a lineup of esteemed experts who would be speaking and also sharing their experiences. From the outset, we would like to also acknowledge the presence of our Deputy Executive Director, Mr. Norbert Mumba, who is also with us on this webinar. And so to kick off our webinar for this session, I would like to invite the chair of the Consumer Empowerment and Market Conduct Working Group, Ms. Rochelle Tomas from Banco Central ng Pilipinas, to deliver the welcome remarks. Rochelle, please.
Thank you, Eliki. Good day to everyone, whichever side of the world you may be in at this moment. Forgive me for not sharing a live video feed as it eats up my bandwidth, and I'd rather be heard than seen at this time. The Consumer Empowerment and Market Conduct Working Group of AFI. It is my pleasure to welcome you for joining despite the constraints that the COVID-19 pandemic has brought to all of our nations, our central banks and ministries, and even our personal situations. The pandemic has underscored the importance of digital financial services in moving money and resources to benefit everyone, from the big businesses and retail consumers, and more so for our small businesses and low-income households. Having access to an account and having the ability to use it for digital money transfers and payments has become a critical lifeline, given the reduced mobility and infection risks of COVID-19. However, the pandemic also brought to fore so many systemic weaknesses in the digital finance infrastructures, including vulnerabilities to fraud, scam, and consumer abuse. The regulatory role of our institutions as central banks and consumer protection bureaus in the life of the consumers has never been more apparent at this time. I am hopeful, though, that through this experience, we will emerge victorious and become more effective regulators and policymakers, and address all of the challenges, as well as gain greater success in the financial inclusion and consumer protection work of our institutions. I am glad that we have AFI and CEMCWG as a venue where we can share experiences and lessons learned, even as we continue to recalibrate our policies and systems in order to respond more quickly and more efficiently to the needs of financial consumers. I don't want to lengthen my opening remarks any further. I would like to thank AFI for organizing this seminar. Thank you also to our resource speakers for spending this time with us and sharing your perspectives. I especially look forward to productive peer learning and knowledge sharing. So I'd like to turn over now to Eliki to continue the facilitation. Thank you, and let us all enjoy the webinar.
Thank you very much, Rochelle. So I know everyone would be undertaking the virtual applause if we are now into the mode of doing everything virtual. So thank you so much for those remarks, Rochelle. So ladies and gentlemen, again, very quickly on the overall running schedule for our webinar today, we will move into a quick introduction of the session before we deep dive into the sharing from our experts that are present with us today. So we have two sessions that we would be hearing from with two perspectives. The first would be from our international experts who would share more on the global practices, what are the global trends, and also looking more so from the market side of things. And then we will move to our members. We will hear more from the side of regulators and what we can do moving forward on the specific topic that we have. And then we will allow an opportunity for those that are present in this webinar to ask questions. So we will activate your mic if you would like to be heard and share your inputs or questions that you want to put through. Following that, we will then wrap up. And we also would like to acknowledge the presence of our co-chair for the Consumer Empowerment Market Conduct Working Group, Mr. Moses Musanto, who would also do the high-level conclusion, sharing of what has been discussed today, and then moving forward with the closing. So as I've alluded to earlier, ladies and gentlemen, we are honored today to have a lineup of esteemed expert speakers who will share with us their experiences, their lessons, and learnings on the topic that we will be focusing on today. So while various COVID-19 related policy response measures have been put in place to address short and medium-term measures to alleviate the impact on businesses and other industries within the jurisdictions, we have noted that there is not much attention on addressing the impact of COVID-19 on consumers, particularly on the enforcement aspect. A greater number of consumers are now experiencing, as we can see, higher levels of distress, and these are caused by the direct experience or fear of the economic and social impacts of the crisis. And many are vulnerable to commercial exploitation. So within the AFI network, we have noted that members have, through various correspondence and various discussions that we've had, shared the various financial consumer protection measures that they have implemented, specifically related to COVID-19. What we have noted is that measures have ranged from amending and implementing policies and regulations to supporting the financial industry and providing assistance to consumers. What we've also seen is that the role of monitoring and supervision of market conduct within financial ecosystem now becomes more important than ever, especially when we're looking from the perspective of the consumers. The COVID-19 experience that we have all seen has also shown that crisis situations create new and heightened risks, especially for vulnerable groups and segments with low financial literacy. And so for us within the CEMCWG working group, it is critical and very important that the empowerment aspect of what we do should be brought to more on the limelight. So these require, as we all know, targeted interventions to protect consumers. In such instances where we've noted financial service providers are offering measures to consumers to cushion the effect of COVID-19, particularly through access to emergency funds, such as increasing limits for their credit cards or easy access to additional loans, we have not really deep dived to see whether if stringent oversight and enforcement measures are in place to ensure that consumers are not over-indebted. And this is one of the major or big responsibility of the Consumer Empowerment Market Conduct Working Group, is to have policies in place that would protect consumers, especially during such times when they become very vulnerable. So the objective of our technical webinar today is to deep dive the discussion on policy and regulatory interventions, and also look at opportunities for cooperation and partnership, and look at the role of consumers, particularly the protection aspect amidst a pandemic. So to introduce our esteemed panelists today, our first speaker is Dato Indrani Turaisingam. Dato Indrani is a seasoned consumer advocate who used to lead until May 2020 more than 60 members in the Asia-Pacific region under Consumers International to build a powerful consumer movement to help protect and empower consumers everywhere. Her responsibilities included overall management of day-to-day operations and direction setting in the Kuala Lumpur office for the Asia-Pacific region. She led Consumer International's campaigning and research work in her region, and also leads on programs to strengthen the members in the region by providing information and facilitating capacity building programs such as training workshops and conferences. Prior to this position, she was the Chief Executive Officer of the Federation of Malaysian Consumers Association, an umbrella body of consumers associations in Malaysia for 13 years. Our next speaker is Mr. Mel Kabil, and Mel has been a member of the PPF Group's senior team since 2009 and is also a member of the Board of Directors of Home Credit since 2012. Mel serves as a director of a number of financial services companies operating in North America, Europe, and Asia. He worked at the Generali Group from 1985 until 2009, latterly as the head of Western Europe, the Americas, and Middle East. During his time, he held various positions, including Chief Risk Officer, Head of Corporate Finance, Head of M&A, and Head of Strategic Planning. He's a fellow of the Institute of Chartered Accountants in England and Wales and holds the Advanced Diploma in Corporate Finance. He's also an associate of the Chartered Insurance Institute, a chartered insurer, and a fellow of the Securities Institute. And then from our member side, our regulators that are going to be sharing the experience today, we have Hazell Marroquin, who is an economist by profession and holds a master's degree in finance, representing Banco Central de Reserva de El Salvador. Hazell's experience are in the areas of financial inclusion and education, regulation of the cooperative sector, electronic money providers, knowledge of the regulation related with financial products, payment systems, and is currently the specialist of the Public Policy and Financial Innovation Department that is in charge of the coordination of the financial education program in El Salvador. And last but not the least is Mr. Anil Paul Kolanur, who is representing the Bank of Papua New Guinea, and he currently consults VPNG in the Banking Supervision Department and is the project manager to the Financial Consumer Protection Project under the Bank of Papua New Guinea. A graduate with law, Anil has special interest in banking regulation and consumer protection. So that, ladies and gentlemen, is a very brief introduction of our session and also our speakers. And now I hand over to Dato Indrani to kick off a first introduction and sharing on the issues of Consumers International. Now, Consumers International, one of the main aim is to empower and champion the rights of consumers across the world. It represents consumers' voice in international policy-making forums and the global market to ensure consumers are treated safely, fairly, and honestly. So we would really look forward to hearing from you more on what, in light of the pandemic, what has been the trend, and particularly looking from Consumers International and the role that they have played up till now. Thank you, Indrani. Over to you.
Thank you, Eliki, and thank you for giving me this opportunity to speak at this webinar. As the previous, speakers and including especially in terms of because of the COVID-19, there have been loss in income, unemployment, and of course then also the lack of access of consumers to traditional sources of finance. What we have seen is that COVID-19 has dramatically altered the way consumers are now interacting with financial services. Online banking apps have boomed, and the fintech platforms are also now playing a major role in digital financial services. Of course, then there are opportunities, but as well as risk as well. Firstly is about financial inclusion. Digital financial services, of course, now has supported greater financial inclusion. But we also then have to see, particularly for the low-income consumers, the vulnerable consumers such as women and so on, in emerging economies, in Africa, in Asia, in many other emerging economies, many of them are unbanked. So now how do they then link up to the digital financial services? Many of them also do not have access to internet, These are some of the concerns that we have. What we've also seen is that, that these services need to be affordable. Information needs to be going to the consumers. That's another gap that, Consumers International, when we worked with our members, we saw that, especially the low-income consumers in the rural areas do not even know what are some of the services provided by the financial services provider and also the digital financial services companies. So these are some of the things that we need to be need to consider. Other than financial inclusion, of course, many of you mentioned the digital sphere. You also then see more opportunities arise for cyber criminals. And, for example, in India, there was a phishing scam that offered, a free Netflix subscription that was used to gain personal banking details. So I think these are the areas that need to be regulated, and, the action taken by the regulators. You have to identify these issues, remove these scams, as well as raise awareness. What we also see is the lack of fintech dispute settlement, especially the vulnerable groups. Now, if they are using the mobile payments and so on, online payments, now where do they go if there is a dispute that arises? So there's also that lack of fintech dispute settlement. You have on the traditional banking, yes, you may have the Association of Banks that can kind of look into this area, but what about the fintech? Who actually regulates the fintech? An area I think that also needs to be looked at. The third area is, of course, the regulatory framework. Many small businesses as well as vulnerable consumers due to the COVID pandemic have sought to seek funds from unregulated online lenders. Again, this of course has caused a lot of distress to the consumers. So need to ensure that there are policies in place to ensure that that there are some safeguards. I think if you look at in the UK, the UK Financial Conduct Authority has provided cautions and ensure that there are some safeguards, and this is then communicated not only to the banks and other service providers, but also to the consumers. One of the things that we have seen is that I would say that some of the central banks have taken initiative used this popular instrument of regulatory sandboxes to see how the deployment of a particular fintech tool to be tested in a live environment. And I think this is an opportunity for countries to learn from other countries' experiences. But we just need to ensure that the vulnerable groups are not left behind. The fourth area that I would say is the use of data protection and artificial intelligence. Again, here it provides a unique opportunity, but as well as problems for consumers, because you see that it is central for growth of digital financial services, that it is much more easier now. Every time you go on an online banking thing, you have these chat bots and all that saying, can I help you, and things like that. And also then sometimes in some circumstances you're able to even identify real-time fraud if if there are these opportunities. Consumers also then need transparency and control about how their data is being used. So, in Malaysia, I see more and more of this because our central bank is quite, strict about how the data is being used. And of course, we also have the data protection laws as well in place. So again, consumers need transparency and control about how their data is being used, to ensure that there is trust in further digital financial services. the fifth area that I looked at is about green financing. What we have seen is that, especially in light of this COVID-19, we have seen sometimes there's been a backward trend in terms of, the use of plastics now. You see more and more use of plastics. But, personally, we feel that, economic recovery should be green, and it should promote global climate action. So I think, again, there's a widespread concern about providing some misleading information and about the impact of the sustainability of their services. So again here, digital financial services of course can ensure that consumers have accessible and comparable information, and I think this has to be promoted widely. Also, then we have also seen now, everybody's talking about changing consumer behavior. So, I think now, especially in light of COVID-19 and sustainability, digital, of course, there's a lot of opportunities for digital financial services, where now consumers now know more about their products, where is it coming from, origin, what are the, ingredients or materials that are being used. And I think here we can also see then how, what kind of carbon footprint, that consumers are having when they actually purchase online through their daily actions. So, for example, points. Some of the things that also then I want to add as well as about the role of consumer organizations. As you mentioned, consumer organizations usually play a role of, raising awareness with the consumers, as well as, conducting some, surveillance through mystery shopping and so on. Again, how this again plays a role, in light of now COVID-19 and you're not able to go to the banks, but I think the regulators should find a way and an opportunity to use the consumer organizations again to ensure that consumers are not affected badly. Some of the things that we have seen from the consumer perspective, consumer groups have been pushing the regulators and also the governments to come up with economic stimulus packages. Now again, how these packages, like for example, for the low income, money is then provided to these households to buy basic necessity items. Also needs to be ensured, because not everyone is banked, and so to ensure that during the lockdown that consumers are able to access these services that is being provided by the government. Many of the I think in many developing countries, consumer groups have been pushing for and have been successful in also asking for moratoriums or deferred payments, on mortgages and on their loans. In Malaysia, in Australia, I think this has happened. It's for 6 months, for example, now. So it's also a bit of a concern for us, the 6 months ends by end of September. So there are many concerns about from October onwards, what happens? Do I pay, whatever that I've not paid for the last 6 months, do I need to pay the interest on that? So I think consumers are also a bit worried. For example, here in the Central Bank of Malaysia has said to the banks on a case-to-case basis to engage with the consumers. Consumer groups have also, reported to us that consumers are also worried about their credit rating score. Now, if they did not, if they took the deferred payment, how is their credit rating score? I think these are some of the areas that if, the regulators can look into, I think there would be, a good start in terms of ensuring that consumers are not exploited, and we can see digital financial services booming in the near future. Thank you. I'll stop there for now.
Sorry, thank you so much, Dato' Indrani. I would like to really acknowledge the points that you have raised, and ending on with credit history, which kind of links on very closely to our next speaker, who is Mel. So we are all aware, Mel, that Home Credit is an international consumer finance provider that operates in 9 countries. And with your focus on responsible lending, primarily to people with little or no credit history, we would like to hear more and get insights into the experience and also your sharing in relation to the topic of discussion for today. Thank you, Mel.
Well, thank you very much, Iliki, and thanks for having me on this webinar. So, as you say, we operate in 9 countries. We've served about 132 million people, and we currently serve around 27 million. And I'll try and share some of the experiences from our side of those 27 million people. So I think the first thing to say that's a challenge for lenders is that this crisis is quite unusual in the sense that it comes from a global health crisis, and therefore it's global. That's unusual because normally economic crises are country-based or regional-based, and so lenders can benefit from a diversification effect that not all countries struggle at one time. This is quite different. So our business in every country in which we operate is very severely impacted. And of course, the biggest impact comes from the dead stop in the economy and the fact that household liquidity is under stress because people have had to stay at home, maybe they're not being paid anymore. Now, there has been, of course, a number of policy responses to that. In some countries, governments are getting money to households through grants, through furlough schemes, and in other countries, they're helping households by stopping outgoings. So, and that impacts very directly on the business of consumer finance because, of course, many of these households have obligations to pay installments on loans. And we've seen a very diverse response from policymakers around the world to the concept of a payment holiday or a loan moratorium. I guess we can probably categorize the response as compulsory loan holiday, which is imposed on all lenders and all borrowers in a country. There are a number of instances of that. Some countries have put a opt-in and some have put an opt-out. So in the opt-in, you have to ask for the payment holiday. In the opt-out, you have to ask not to have a payment holiday. So quite different responses. And the durations are also very different. In some countries, it's 3 months. Some countries, it's 6 months. And in other countries, it's until the end of the year. And a further complication is that policymakers have reacted differently with regard to the interest that's payable during this payment holiday. In most countries, the contractual interest continues to accrue. In other countries, policymakers have intervened and said, actually, it's going to be fixed at a base rate plus a margin, and that quite often will be less than the contractual rate. And in other countries, they've said there's no charge for the delayed payment of the installment. That's very rare, but there are a couple of countries. So it's quite challenging for lenders to put in place the infrastructure to deal with all those different types of payment holidays, the IT infrastructure and so on. But there's also a very big challenge to communicate with the customers, because just like every other business, consumer finance lenders and ourselves, home credit, have had the same problems of not being able to go in the office, not being able to staff call centers. So we've had to move to a work from home environment. Now, we've managed that reasonably well because we're quite a digital business. And as we've heard already, I think digital businesses have managed this crisis better than other types of business. But if you haven't got that digital infrastructure, it's challenging. But of course, the question is how to communicate with our customers about these payment holidays and what's the best option for them, because they need to be educated. So, for example, if interest is continuing to run, is it better, if you can, to pay the installment, or is it better to take the payment holiday? So you have a liquidity advantage, but in the end, it's going to cost you more. So, I think this is an issue that's not been dealt with very well across the different countries, because it's largely been left to companies to make those communications. And how well a company does it, of course, depends very much on its culture and how well it treats its customers. There's also the potential during these payment holidays for some companies, and we've seen this in some countries, to impose penalties. And again, that needs to be something that's very strictly controlled. Now, at the same time that the customers are in this difficulty not being able to pay back, and we've had to introduce payment holidays, that then imposes financial constraints on the lender. And there are a number of moving parts here. The first bit is that, in principle, delay in payment will create the need to make a provision. If you make a provision, it depletes the capital of the lender and therefore makes it difficult for the lender to make further loans. I mean, it can also put financial strain on the lender. So we've seen in most countries, the regulators moving to give as much scope as possible to allow loans which are benefiting from payment holidays not to have to be provided for. So there's quite a degree of flexibility in most countries' regulations, and particularly in IFRS 9, the accounting standard that impacts in most countries, to be able to not provide for loans which are in payment holiday, but which you believe will ultimately be repaid. However, nonetheless, there is capital strain. And we've seen for banks particularly, regulators move to ease that capital burden, for example, by not requiring the countercyclical buffer and reducing the capital stack in different ways. But that's putting some pressure on the consumer finance companies, which are mostly non-banks. And we have seen in a number of countries that the volume of new lending is very much reduced from the period before the crisis. I think there are two factors there. One is clearly there's a much greater risk averseness to lending because of the new economic situation. But there's also a constraint that many companies are unable to lend because they're capital constrained. Also associated with that are problems that companies have about funding and liquidity. So as in any crisis, liquidity dries up, and central banks have moved obviously quite strongly to fix that by injecting liquidity into the market. But generally that liquidity goes to banks, not to non-banks. And one of the problems non-banks are finding is that that liquidity doesn't reach them. So there's a problem with a policy transmission. For example, in some countries, the money goes to the banks and then goes straight back to the central bank, sometimes at a higher rate. It doesn't percolate down through the chain, through the non-bank to the individual or the micro business or small or medium business that needs those funds. There's, in reality, a crisis of risk averseness, not a crisis of liquidity. Now, some countries are managing that by taking government guarantees on some of the loans that are made from private sector banks to non-banks, but generally speaking, that is not happening around the world. So we can see that the capacity to lend from the non-banking sectors is significantly reduced. So I'm very conscious of the point that was made earlier about the need to do responsible lending. But I think one mitigant against a problem of irresponsible lending is that there is much less money to lend. So if I look at, so we have quite a big business in China. If I think about what happened in China, demand for borrowing went down very quickly in the crisis, down to about 50% of its previous level, but rebounded very quickly. But the fulfillment of that demand was significantly less because of this risk averseness. And I'm very conscious I'm running out of time, but I'll just make one other comment that restricts the ability of businesses to continue to lend, and that's the point you made about credit and it's very important for a dynamic consumer finance industry to have a solid credit reporting system. And one of the issues, of course, about payment holidays and so on, is that the person's credit record is not going to be impacted. But in doing so, everyone who's late in paying is not going to have their credit record impacted. And so consequently, the accuracy of that credit database becomes somewhat impaired, which will again will cause non-banks to be more cautious in their future lending. So I think, sorry, I've probably gone on too long. I'll stop there. Thank you very much.
Thank you very much, Mel. I think those were some very important points that you have raised, particularly from the perspective of market players and looking at the overall liquidity issues which you have shared, and then also considering that, you know, eventually we do not want our consumers to be deep diving into these areas of shadow banking or unregulated funders that come through, which, you know, really, if the mechanism is not clearly articulated from the outset. So it's a very valid point that you have raised, which now links on very much into our next two speakers. So we have our members from El Salvador and also from Papua New Guinea, who's going to both share their perspective, representing members who are regulators. So Hazell and also to Anil, you know, you've heard the issues that both Dato Indrani and Mel have raised, particularly on the harms, you know, on financial consumers, which COVID-19 has brought into play. You know, there's increased fraud and scams. You know, there are instances where unexpected loss of income and individuals are unable to make loan payments. You know, this will expose them more into aggressive debt collection practices. And, you know, when there's late payments or default in their fees, you know, it can also result in unfavorable terms and conditions, often leading to increasing over-indebtedness. So as regulators and also representing the region that you're both from, what immediate actions can, you know, we as regulators and members of the network can take to address this impact? I mean, at the same time, it's also good if you could share your current experiences and the trends that is happening on your own region or country. Thank you. So we'll start off first with Hazell.
Yes, thank you, Eliki. So besides the impact of COVID-19, we also in El Salvador has a tropical storm called Amanda. So those are the two events that we had and that impact in a big way in our financial system. We have been in lockdown from March to up to now. Actually, El Salvador has been opening the economy through different phases. So another important information as an introduction is that the central bank has an active role as a regulator, and it has issued temporary regulation as well as the role of the financial superintendents and also consumer protection agency has been really relevant. So up to date, there has been an expansion in the consumption of health products and also food that has been sales through online services. So the growth of the national e-commerce for this type of product has increased. And through the consumer protection law, electronic commerce between companies and consumer is being regulated. The role of the Consumer Protection Agency has been relevant due to they have been monitoring the no increases in the prices of basic products, such as the previous that I mentioned, basic grains and health products. There was approved an executive decree for fixing price in the products that I mentioned. And also there was approved a reform in the consumer protection law. Because of the lockdown that has been from March up to now, some companies had to close and suspended employee contracts. And this led to several companies reducing their sales, even though they maintained their online service for a period of time, and others had to close permanently. Finally, the payments and transfer system between deposit accounts of different banking agencies have been increased, reason why these financial institutions have taken the temporary decision not to charge for the use of this system. And another important point is that for law was approved deferral of payments for months from April to June for those basic services such as water, electricity, and also credit payments, including the minimum payment for the credit cards, so the users could transfer those payments distributed over the current terms of the contract, of the credit. Regarding the role of the central bank, what I want to mention is that the central bank has issued temporary regulation with the aim of facilitating liquidity for banks, cooperative banks, and credit and savings societies. 3 of them specifically. The first one related with the liquidity reserve on deposits and other obligation. Another temporary technical regulation to face breaches in contractual obligation, and also a temporary technical regulation for the granting of credit. Most of the actions that Consumer Protection Agency has decided to implement are related with the prices. They have conducted a survey of prices for different products, and the results are disclosed. Some pharmaceutical industry has been sanctioned for breach of prices. Also, Consumer Protection Agency has facilitated electronic channels to provide attention for customer complaints related with the marketing of medical products at overpriced. Also, they are joining the medical supplies and food suppliers to a program for accomplished with the consumer protection law. And they are providing webinars through different platforms to provide trainings for financial education topics and also consumer rights. Those are open webinars that are open for all the consumers. And also another important thing is that considering the relevance that has taken the social distancing, digitization with its limitation has grown with the use of electronic accounts, online credits, debit, card payments, among others. Also the use of interbank transfer for free. And regarding the regulatory and policy interventions to support the microfinance sector due to the crisis, mainly the approval of the law for the creation of the Trust for Business Economic Recovery by the Development Bank of El Salvador, which will allow MSMEs to pay salaries for their employees, soft loans for MSMEs, and productive financing for entrepreneurs in the informal sector. So basically, those has been some of the actions that Consumer Protection Agency, financial superintendents, as well as Central Bank has taken in order to support consumers due to the impact of the COVID and also the impact that has as a result of the tropical storm, Amanda. So that will be my intervention.
Thank you very much, Hazell. And sorry to hear about the tropical cyclone, Amanda, that has landed on El Salvador. But it's very interesting also to note the various initiatives that has been undertaken by the central bank, particularly, for example, these webinars that they are undertaking, which you shared. These are some good insights, which I'm sure that other members that are present on the call today would be able to learn from as well. And then we move on to our last speaker, which is Anil from Banco Papua New Guinea. Anil, can you hear me?
Yes, can you hear me?
Yes, we can hear you loud and clear. Please go ahead. Similar to the issues which I had raised with Hazell, the same also applies to you. And we want to hear more on what Banco Papua New Guinea has undertaken and what are some of the, the regulatory policy responses put into place, particularly around consumer protection.
Yeah, I will keep myself hidden for some time because the bandwidth is a bit slow over here. So if my sound is really breaking, Elike, it is your responsibility to make me understand that I'm not making much sense. Okay. See, greetings from Banco Papua New Guinea. Actually, Papua New Guinea responded to the pandemic by declaring a state of emergency at the beginning, and that has really helped to prevent the first wave of pandemic in the country. Later, the country slowly opened up, and in spite of all the precautions like quarantine requirements, personal hygiene, use of mask, social distancing, etc., still recent days we have some cases that came out. So we are still on controlled lockdown at this point of time. I think I just want to give a bit of brief on the financial consumer protection framework in the country. In Papua New Guinea, the consumer protection is the responsibility of Independent Consumer and Competition Commission, ICCC. Considering the importance of protecting financial consumer, a separate act is under consultation. Thereby, financial consumer protection aspect will be taken out or carved out from the General Consumer Protection Act and mandated under the financial regulator. So the project which I am working with is actually preparing the framework for financial consumer protection in the country. The consultation is ongoing, and pending the parliamentary process, the Banco Papua New Guinea is currently engaged in financial consumer protection using the provisions of Banks and Financial Institutions Act. So there are some limitations which we are facing in implementing the financial consumer protection at this point of time in full-fledged, especially on the consumer redress aspect. But we hope we will get through the Financial Consumer Protection Act soon, and it will be a full-fledged work under the central bank to control the financial consumer protection aspect. The bank is involved in the financial inclusion area for the last few years, and this has introduced a new set of customers to the formal financial sector in the country. Not only that, bank is also involved in gender equity, and for that actually the bank is involved in developing, piloting and rolling out financial product in association with the financial institutions in the country. So there are a couple of special products that are actually rolled out in the country as part of the gender equity policy. Bank is also working very closely with the financial institutions to provide the special products for micro and small and medium enterprises in the country. So COVID has really elevated the responsibility of the bank to be involved in the consumer protection aspect in a larger way. The bank also conducted an employment or a business pulse survey to understand what is the impact of COVID on, especially on micro and small and medium enterprises. And the findings is a bit interesting, almost 25% of the participants. The survey is still ongoing, it is not completed, but an interim result I've collected for sharing with you. And the preliminary finding shows that the business of almost 25% of the respondents to the survey is closed partially or closed either by mandate or by choice. And 50% of the participants are not very sure like when they are going to open or when they are going to get closed. 70% said that their sale performance has declined during this particular period. And one of the most important aspects from these preliminary findings is that loss of employment and reduction in benefit or reduction in hours of work. And the most impacted set of people is the women employers. So the COVID has got some impact on women folks in the country. Another interesting factor which is noticed is also that the people who have in absence from work, the most of the people who are absent from work is also women when considered the MSMEs. So basically there is an impact which the bank identified with the COVID, especially on MSMEs and MSMEs, that it is affecting the employment opportunities of women in specific. So the bank has taken a number of number of policy responses to address the impact, including general central banks are doing like ease liquidity by reducing the cash reserves requirements, reducing the KINA facility rate by 3%, providing a discount facility for discount window facility for second-tier institutions that includes microbank. But I just want to highlight like a couple of things which the bank has taken as part of the COVID response to the financial consumer aspect. We are associating very closely with the financial institutions, the banks, and the licensed financial institutions in the country. As Mel was saying, that we have provided a 3-month repayment moratorium, which we are thinking of looking at it again to find out like whether it should be further extended or not. And that moratorium is specifically given for borrowers who are impacted by the pandemic. The financial institutions are actually advertising to their customers about this moratorium. So we have encouraged the financial institutions also to publish the availability of the moratorium to the public, so that the public can take the benefit of the facility. The bank is constantly collecting the information about the benefits taken by the public to understand what will be the impact, and it's very closely monitoring the moratorium period. The bank is also making sure that this moratorium reaches to the right customers. And interestingly, some institutions see the impact of COVID is not affected the entire community. There are certain people who are really interested to repay the loans. There are certain institutions which are also providing some kind of incentives for like interest rebates, etc., for encouraging people to repay if they have got a facility to do that. So basically, it is more like a participation with the regulator, with the institution, and also with the customer to make the moratorium to reach the right person. At the same time, on the prudential side, we have taken changes to the prudential requirements for provisioning and also the treatment of the rescheduling of the loans, etc. The customers were allowed to restructure the loans and reclassify the new loans, including extending the repayment period to improve the credit capacity without any form of additional fee and charges. So they are free to do that. And FIs are, the financial institutions are restricted from reporting to the Credit Data Bureau about the default which has happened during the financial consumer, during the pandemic period. So they are not actually reporting to CDB about defaults because it is not considered as default. As I said, like prudential requirements or prudential standards has been reworked to avoid further provisioning, which will actually disincentivize the financial institutions. The bank is also encouraging financial institutions to do some kind of education to the clients. For example, when they are coming to withdraw the savings, they are given a bit of financial education to make them understand the importance of the saving, the keeping of the savings, etc., so that the money is not taken free by the financial institution. A good example is the superannuation funds, advising the beneficiaries, especially those who lost the job and are eligible for withdrawing the contributions. They are teaching the consumers coming to the superannuation funds about the importance of the long-term savings and the retirement benefits which they are going to get, so that they are taking an informed decision before withdrawing the money. So that kind of consumer education is also built into the financial institutions to make sure that proper information has been gone to the consumer. Bank is also looking a close watch on the advertisements of the financial product and services to avoid any form of misleading or deceptive advertisements. And especially, bank is advertising or warns the public through advertisements about the scams that can happen during this particular period of time. So we are taking care of informing the public the right information and their rights which they had during this pandemic period. The complaints received by the banks are consulted with the concerned financial institutions and now amicably settled by discussions, and we are actually addressing that particular aspect very fast. Bank is also collecting information about the complaints received by the financial institutions often, and we are also checking on the turnaround time or turnaround time taken for redress. Bank is also closely watching the behavior of these vulnerable groups and segments that include women, youth, MSME, etc. The way they react to the products which has been developed specifically for them, to understand like the usability of the product during such stressful time. So that is also an ongoing process to understand the feasibility or usability of the products. Exactly, digital financial services is other area where bank is encouraging the banks and financial institutions to work with. The bank is also helping with the platforms, the RUPS platforms which the bank use for retail payments. These are certain things which with the bank has done at this point of time. I hope like you heard me properly. And it's me. Thank you.
Thank you. Thank you so much, Anil. And I think hats off to you for being awake around this time. I think it's early wee hours of the morning in your side of the world, yeah? But yes. Thank you so much for sharing the experiences. Particularly interesting here is the education aspect for the clients, which you have highlighted. For now, we see that, you know, for such kind of emergency funds, most members are also sharing how their own jurisdictions are allowing for participants, so for consumers to reach out to their superannuation funds to utilize funds for such kind of emergencies. But then again, you know, the long-term impact and the need and also the understanding of why that initial savings is there should also be, you know, informed to them so that they can make a decision thinking of their future moving forward. And also on the issue regarding the advertisements, you know, now we've seen that with this pandemic and the impact that it has caused, there's lots of Ponzi schemes that's coming up for quick wins. And I think it is also very important for regulators and those out there in the market to ensure that the advertisements or communication, you know, should constantly go out to the public at large to inform them, specifically those that are very vulnerable, you know, to this kind of Ponzi schemes who can be easily swayed for quick wins. Is also a very important issue. So thank you very much for those contributions that you have shared. Now we are open to all participants that are signed on. If you would like to ask a question, or if you would like to also come through with sharing your experience or the various initiatives being undertaken at your own jurisdiction, you can do so. All you have to do is just raise your hand so that we can unmute you and allow you platform to share your experience, or if you have any questions, you're also this is also the opportunity to ask questions directly to the experts that are sharing their experiences today. So we look forward to your participation. I'm trying to look here to see who has raised, who's going to be the first CEMCWG member to put their hand up to ask a question or contribute. Okay, so there's a chat here. Thank you, Sulita, putting that through. Okay, maybe while we're waiting for our members to ask any question to come through, I will come through with a question now to all the panelists that is here, except for Anil, who's already shared work that they're doing. So, you know, for now, when we look across the globe, women are being disproportionately impacted by COVID-19. And so, you know, we would like to hear more from those that haven't shared any issues or initiatives that are being undertaken on specific gender patterns that you have seen with regards to consumer protection during the pandemic, and if there are any activities that you are undertaking, you know, particularly to support the vulnerable segment, which here we are talking about women, including women MSME owners. So this would be open to the panel. If there's any response, maybe we go first with Dato Indrani.
Yeah, thank you, Aliki. I think from the gender perspective, the consumer groups actually conducted a survey among you know, some of their members, and what we found was from the results that that we gathered was that, of course, when we asked them, you know, what were the difficulties that they were facing, the first one, of course, was about repayments. But the second point was also very interesting because it was more about paying for the household necessities, for example, food. And I think this is where we see the role of women trying to balance, you know, with the limited income that sometimes is, you know, being provided by the spouse. You know, how do you lockdown, and you know, I think everybody had to stay at home, and I think increase in even the food consumption at the household level. So I think that was something where then you saw a lot of other psychological you know, impact, you know, cases of abuse, you know, by spouses because, you know, no food and things like that. So I think that is also one aspect, not only from the economic perspective, but how that economic perspective has actually led to that psychological and also that physical abuse. I think that impact also, you know, because of the COVID has resulted in that. So I think, you know, just to kind of keep that in mind, because this is where the women and children are ultimately the ones who get, you know, exploited.
Thank you, Dato, for that. Mel?
So I think in terms of the this coronavirus crisis, we're probably not doing very much, particularly for women, but we have been doing historically, particularly in the context of our financial literacy activities, and in particularly in our offline training that we do. That's principally focused on women. If I think about the crisis, I guess the household squeeze has been across the board, and you know, that we don't see the problems particularly with a gender lens. It's, you know, the people just have problems to pay back. I can understand the problems that must be happening behind that that Indrani's talked about, but our immediate, I guess, focus is to provide the payment holiday, to provide relief, you know, ultimately to look at restructuring the loan or, you know, loan forgiveness. But those are, you know, that's a kind of gender neutral process. It's just focused on the debt itself.
Thank you. Hazell, do you have any inputs here?
Yes, in the case of El Salvador, we don't have a gender focus to yes, but what we have is only, as I mentioned, the deferral of payments, but this apply for all of the, I mean, we don't have a gender focus. The deferral of payments is for all consumers from April to June, as I mentioned previously. And also the government provide a basket of basic goods for the poverty sectors in the country that also support most of the families that are in charge of a woman in some cases, right? And another thing that I will mention is the approval of the law for the creation of the Trust for Business Economic Recovery by the Development Bank, because with the approval of this law, the benefits will go for all MSMEs, and most of the MSMEs are in charge of a woman. So I think those are the three measures that has been implemented in the country.
Okay, thank you, Hazell. So we have two questions here. The first one is on how to ensure policy transmission, any solutions for panelists. Okay, so I think this was the one Mel was sharing, the failure of policy transmissions, particularly when we're looking at central banks injecting liquidity into the system, and the liquidity doesn't really go down to those that are required to be addressed for. So are there any solutions from the panelists on how we can address failures of policy transmissions?
Well, shall I, if that's okay, I'll do, as I raised the point, I'll just comment that this is, of course, not a new problem. It's a problem that's been around for a long time, and there was a lot of very good research done after the crisis in 2008, 2009. And particularly in the US, about the restructuring of residential mortgages and why it failed. It was not as successful as it should have been. And it was a combination of poor incentives, the wrong institutions were chosen to do it. I guess the lessons from that have not been particularly learned. If I think about this time, the issue is really, it's a very simple one, that each link in the chain becomes risk averse and thinks about themselves and their own balance sheet and their own preservation. So they're not willing to lend on. And sometimes there are also issues where they can make more money taking the cash from the central bank than placing it somewhere else, even back on the central bank's balance sheet, and they make money from that. So why would they want to lend it to a more risky proposition, for example, a non-bank? So at those times of crisis, I guess the state needs to step in and offer some kind of first loss guarantee or even guarantee. And I think we've seen that in the lending directly to companies, where particularly in Europe, the central bank has been guaranteeing the loans, and initially they were only guaranteeing a portion of them. So it was still very difficult to get the money to the end companies, because banks were still doing their full due diligence, and they were still thinking about the fact that they would lose. They would, in the UK, for example, they'd lose 20% of it. So they were very cautious about that. So it didn't really work. So the UK government then moved to guaranteeing the whole of the loans, and these are so-called bounce back loans for small to medium-sized enterprises. So banks that made these loans, if they went bad, they were fully covered by the government. But of course, the risk there is one of moral hazard. And there's already a suggestion that lots of people who shouldn't have been lent money were lent money. So I think my personal preference is a kind of midway, where some portion of the first loss is maybe guaranteed by the state. So that takes away the risk averseness, but doesn't create too much moral hazard. So that would be my suggestion.
Thank you, Mel. Is there any contributions from the others? Okay, then we move on to the second question. There's a second question. I think it's also to Mel. With a moratorium on the payment of the loans and the non-publication of the risk rating, so as not to affect the consumer, what about the financial income of the banks? Will surely generate losses. What actions are expected to be taken?
So I think, of course, that's right. People are not going to be able to pay back, so there are going to be greater losses. One of the features of current accounting is obviously that we have to book future expected losses. So that's something of an art rather than a science. So as we provide for those losses, we obviously take a hit in the profit and loss account, which removes ultimately capital of the bank. So it makes the bank less able to lend, and so it can't grow its assets. It also, of course, makes the bank weaker. But what has been happening everywhere, and particularly in Europe, driven by the ECB and also by the Bank of England, has been an urging for companies not necessarily to book as losses loans which are benefiting from a payment holiday or a moratorium, and to try and look through and make a judgment as to which of them will ultimately go bad. So which are only not paying because of liquidity stress rather than credit stress. But nonetheless, you will have seen that the big banks in the world have booked huge losses, which reduces their capital, which reduces the amount they can lend. Now, for banks, there has been, of course, moves by the central banks and the regulators to require them to have less capital. For example, as I mentioned before, the counter-cyclical buffer is released, but still it has a very big impact. And then it has a longer lasting effect because the people who have been given payment holidays and also moratoriums may include, of course, people who are not good credit risks, and they probably won't then be entered in the credit bureau as defaulters. So in the future, the credibility of the data set in the credit bureau is suspect. Institutions know that, so they're going to be more cautious about lending. And the best way to get cheap loans to people is to have good infrastructure where lenders don't have to build in a conservative margin on the interest rate because they're confident they have good data. I think one of the most important things any country can do is have good credit bureau infrastructure, because then you don't have to build those conservative margins in. Now, what's going to happen is all the credit bureau are going to be slightly dubious in terms of the quality of their data because of this incidence. And so there may be a detriment to consumers because lenders will build in this prudential margin in the future. Excuse me.
Great. Thank you, Mel. So there's I'm not too sure whether it's a question or is it a Francois, do you want to share what you have written? I've actually allowed you to speak.
Yes. Hi.
Buraho.
Hello. Hello. Yeah. Thank you for this opportunity. Actually, my intervention is related to interest rates accumulated during the moratorium period. For instance, in Rwanda, since April, we have those moratorium in Banco and the financial and the microfinance. But clients' complaints now coming, they are challenging even these those accumulated interests. For instance, if I have to pay, let's say 5 million Rwandan francs, maybe principal 1 million, 4 million for whatever, they say, why should I pay interest during the moratorium? There is no business in that period. Why banks or microfinance would wait to have those interest rates when they know there is no business? At least these interests should be removed, and at least they pay the outstanding balance. That's the client side. But when discussing financial institution, they also challenge, they say, who would bear this cost? As Mel pointed it out, some banks are losing business, they want more capital. So it's a kind of cycle, but on our side, putting moratorium is good, but cumulated interest for 3-6 months, because we see the pandemic is now, initially it was supposed to be by July, the pandemic would be mitigated, but we still have a long journey. So how do you see across AFI members these accumulated interest rates being raised, and this may also impact negatively the client capacity to overcome the pandemic economic impact? Thank you. So Eric, I think I can hand over to you. That's it.
Thank you. Thank you, Francois. Thank you very much. I think, yeah, it is a valid point which Francois has raised. And, you know, the thing is, what is the take of the members in the network with now the COVID dragging on, and what are we supposed to be, you know, actually looking at? I think Mel has shared some experiences in some cases of certain countries that have different options when it comes to the provision or what is provided for when it comes to moratorium. For example, some it is fixed, some there is no charge for delay, some which is given different payment holiday options. So I think these are good lessons and learnings that we can consolidate and, you know, share in terms of peer learning on what other countries are actually doing. Is there anything you want to add here, Mel?
No, I think the one observation I would make is that if you don't charge the customer during the moratorium period, the bank or the consumer finance company is still having to pay its funding. So the losses arrive in the bank or the consumer finance company, and, you know, the risk is obviously to weaken the financial system by doing that. But ultimately, it's a political decision. This is a cost. And the question is, who is going to bear the cost? Will it be socialized, or will banks pay the cost? Now, in some countries, of course, banks are not very popular from the last crisis. So maybe it's politically expedient to force the bank to pay. There is, of course, the consequent weaker financial system. But, you know, ultimately, this is really a political decision, I think.
Thank you. Thank you, Mel. And thank you, Francois. So there's a last question here. So it goes, amidst the COVID-19, it's the DFS and FinTech that flourish. But Indrani brought an interesting point that there is dispute resolution systems in many countries in relation to disputes with FinTech. How may the issue be solved in the near term? Indrani, can you hear me?
Yeah.
Yeah.
So yeah, and I think this was something that I brought in because I think in many countries there still isn't the dispute resolution mechanism that regulates or addresses the issue by the fintech companies. So usually you have dispute settlements within banks, the traditional banks. But in some countries now they're coming up with these regulatory sandboxes, as I said, where the central bank or the national authority provides an oversight. The Ministry of Finance, for example, provides an oversight during a limited time period to see whether what works and whether those complaints can be resolved during that time. So I think these regulatory sandboxes have to be explored further, maybe under AFI, to see what works and what doesn't work, and sharing of best practices. I think this is an area that, as mentioned, in the near future would be very useful. So many e-wallets and things like that, and every single cent now counts for the ordinary consumer. So perhaps this is an area, the regulatory sandbox could be an area for further research or work that AFI could look into in the near future.
Okay, thank you very much, Dato Indrani, for that input. So I don't think there's any more questions coming through, and I don't have any more questions for the panelists either. However, from the outset, I would like to take this time to thank you all for your participation and for your time. But before we conclude, I would like to invite the co-chair for CEMCWG Working Group, Mr. Moses Musanto, who will give us brief highlights on what has been discussed today and some of the important points that we can take forward within the working group to focus on when it comes to consumer protection in the case of a pandemic. COVID-19 is a learning which we can work on and tailor-make what are the provisions of all responses we have to undertake should there be any further crisis or any form of emergency responses in the future. So Moses, over to you, please.
Thank you, Ediki, and thank you, our panel of experts, for such a wonderful presentation. And like Ediki has mentioned, I will just quickly look at some of the takeaways from our meeting. And indeed, listening to the presentations, I've observed that our objective for today's webinar basically have been reached or have been achieved. Our focus has been on need of points relating to policy as well as regulatory interventions, opportunities for cooperation and partnership, as well as our role for consumer protection amidst the pandemic. When you look at what's happening on the ground, indeed, we have seen that consumers their disposable income has been reduced, and this is basically due to job losses, and also this has been affecting the consumption of goods and services. At the micro and small medium enterprises level, we have observed from the discussion we have had that there's been loss of a market, reduced demand for goods, as well as sales, thereby resulting into closures of some companies. Some have been temporarily closed, but some, like we have read from Papua New Guinea, some of them have been closed permanently. The other aspect which we have observed from the presentation is the fact that there's been reduction in savings and investments. And then this is basically tied to the fact that there's been no income coming through because of supply aspects. But this has also negatively affected productivity, thereby resulting to a reduction in economic growth. In terms of over-indebtedness of customers, I think there was a mention to do with the fact that more central banks, jurisdictions are now providing or encouraging financial service providers to provide emergency funds, and to some extent, these might pose a risk in terms of disregard to responsible lending factors. As you are aware, with the aspect to do with not submitting regularly the credit reporting information, that might subject some customers to over-indebtedness. I think one interesting point has come out from our discussion is the fact that some customers, consumers, and SMEs have been facing difficulties in loan repayments. And we have seen central banks providing payment holidays, where I think has been quite ably discussed. But also what we have observed from the discussion is the fact that there's been an increase in financial scams as well as cyber fraud. And the emergency of too good to be true investments have also been seen. From Zambia point of view, we are currently leading a team that is investigating two Ponzi schemes from our southern part of the country. And this is quite a big matter now. And this is because of the COVID-19 situation. But also, I think from Edran, she mentioned that consumers are now resorting to getting funds from unregulated lenders. And this basically now poses a big challenge to our consumers, because those who are not regulated as lending institutions, the customers may not have proper redress or recourse to any complaint that they may have. I think the other aspect which is critical from our discussion we have had is the fact that generally there's a push towards promotion of digital financial services, and we have seen a good number of FSPs, automating as well as digitizing their processes, and this has also resulted into having a bearing on our financial inclusion agenda as a network. But again, we are alive to the fact that with the drive or the increase in digital financial services platforms, or instead of these platforms, we have the potential, the risks of of fraud and other risk emanating. And usually the women, as compared to men, are most victims of such. The other aspect that which we have observed from the discussion tonight is the fact that there have been a series of measures that the various central banks and financial regulators have put in place. And some of them include deferral of loan repayment, changes in repayment terms, the payment holidays. And I think the question has been now is who bears the cost of this? So I think going forward with the peer review, peer learning opportunities within the network, we need to discuss something around this topic of who bears the cost of payment holidays. The other aspects which have come out very, very clearly in our discussion tonight relates to the fact that some central banks have put in place restructuring of loans, or as well as extension of loans without additional costs. And this is one of the aspects that we can learn from and be able to implement in our various jurisdictions. But also we have observed that there has been enhanced disclosure requirements and promotion of digital transactions. And this has resulted into reduction in person services. But like it has been heavily mentioned by our panelists, I think this has an impact on consumers who may be vulnerable in the vulnerable group. For example, the elderly who may not have that digital capability strength. They may have lower digital capability. So in our financial education programs as a network, we need to ensure that we take care or cater for such type of grouping. The other aspect, as I try to sum up now, relates to the possible regulatory and policy interventions that we as a network we can take home and be able to deflect over. Number one, I think there has been a strong emphasis on the need to develop or to strengthen our policy innovations. And I think our first speaker did mention the aspect of the role of regulatory sandboxes. But also we're talking about aspects to do with cybersecurity, data protection, as well as privacy frameworks. These need to be well looked into. The other aspect has to be the continued review of our regulatory models so that they don't remain rigid. And I think from Papua New Guinea as well as from El Salvador, we did hear submissions from our panelists on how the central bank has responded to this pandemic by adjusting or making some amendments to their policies as well as to their regulations. And then the other aspect which is critical in terms of our policy interventions relates to the fact that we need to have continued monitoring of risks which arise to financial consumers as a result of any pandemic, or in our case, COVID-19 pandemic. And like we have mentioned or heard from our panelists during the discussions, I think some of the risks include difficulties in making financial commitments, loan repayments, as well as scams or cyber fraud. But there's also need as a network to continuously monitor some of the measures. For example, the payment moratorium, we need to monitor how it is being implemented. With regards to, for example, the FSPs, I think this came from Papua New Guinea, in terms of how are they advertising their moratorium provisions? Are they providing clear information? Is there any room? Are they misleading customers? So the idea here again is just to ensure that advertisements are not having any potential to mislead customers or any potential for scams that can come out of that kind of an arrangement. The other aspect is critical under policy intervention that has to do with the need for the regulators ensuring that the measures which have been put in place, for example, the payment moratorium, its implementation should be done in such a manner that it goes down to the right persons so that the right persons do benefit. And that is critical for us as regulators to ensure that we continue to do the monitoring. But also with regards to fintechs, there's been a point that we need to ensure that dispute resolution mechanisms are strengthened or developed so that such companies ensure that they do their business without impacting negatively on the customers. And then generally there is need for internal dispute resolution mechanisms, and these have to be reviewed, and so that their impact is ascertained. And this also relates to the aspect to do with turnaround time vis-a-vis the complaint management. But also what is critical and what has come out from the discussion is the aspect that some of the regulators have conducted business or price surveys just to ensure that customers or consumers are not exposed to exorbitant pricing by the FSPs or other institutions. In terms of collaboration and partnership, I think this has been ably mentioned by our panelists. It's critical that both the financial regulator as well as a general consumer protection body, they should work in hand. And as it relates to provision of internet services, it is critical that we work together also with the telecom regulator so that we ensure that the customers, even as we promote digital financial services, we ensure that customers, especially those in the lower brackets, have access to internet services. In terms of consumer awareness of financial education, again, we have received some wonderful submissions, and that relates to the fact that as a network, we need to ensure that we include policies relating to awareness raising, risk mitigation, consumer compensation, as well as the rights and responsibilities of consumers. But above all, what has come out strongly as well is the fact that these campaigns or awareness raising campaigns should be segment targeted. So we need to ensure that the vulnerable groups, the youth, the gender, the women are not left out, are not left behind. They need to be brought on board. The other aspect that has come out from the presentations that have been made is the fact that the financial service providers are encouraged to conduct financial education programs to their clients. And I think Papua New Guinea did give us an example of how they are using FSPs to provide this education to retirees insofar as the significance of long-term savings is concerned. And above all, I think we have also received a submission from our colleagues from El Salvador relating to how the General Consumer Protection Body agency is working with the central bank in offering webinars for consumers. And this is being done to all consumers who are available. So in a nutshell, these are the certain aspects that have come out from our panel of learned experts. And like we always say, we still have work to do as a network because we know that a strong consumer protection regime is key to ensuring that ensuring that expanded access to financial services benefit consumers, thereby enabling them to make well-informed decisions on how best to use financial services, and also building trust in the formal financial sector. And this is what we want to see as a network so that we can have a healthy and a competitive market. And lastly, we need to ensure that we work closely with the FSPs so that we ensure that markets continue to serve its consumers fairly amidst the pandemic we are in as a network. I thought those are some of the key aspects that have come out from our discussion, our technical webinar for tonight. Over to you, Edik. Thank you.
Thank you so much, Moses, for that very comprehensive wrap up of the discussion points that came out from our webinar today. And so on that note, esteemed panelists, Indrani, Hazell, Mel, and Anil, and all dear participants that are still logged on, we again would like to thank you so much for your time and active participation in today's technical webinar. Your contribution and commitments are very much appreciated. We will be sharing the video recording of this session together with a summary note to members of the CEMCWG working group and those that have participated in this webinar. We also would like to extend our appreciation to our Deputy Executive Director who's been with us throughout this entire webinar, to our Chair of the CEMCWG working group, Ms. Rochelle, and to our co-chair also, Moses. Our interpreters who have been very diligent in interpreting in Spanish and French, and to the AFI team for your support. Stay safe and take care, everyone, and a very warm greetings from Kuala Lumpur, and a very good day and goodbye. Thank you so much. Bye-bye.